Big warm good evening and welcome to our, I could just say hello, and but yes, it's the weekend. It is Saturday the 20th of February, and I'm just talking through my thoughts on how I'm going to be approaching the global indices in the coming week. So starting off with the Dow. All right, so the Dow is continuing to kind of trickle higher. There's a little bit of local support around 31.1, and the weekly not overextended. So in isolation, all of this looking pretty good. I'm just kind of keeping an eye on the kind of momentum, the sentiment of the MACD at the moment. A little bit flat, a little bit slightly bearish, not as bullish as I would expect. The S&P continues to pull back into the moving averages here. If it comes down towards 3.8 and 3.850, this could also be the beginning of a bit of a weekly correction here, back down into the moving averages here. It's bumping off 4,000. But otherwise this week, it's not also, because I don't really see too much bearish divergence here, I would also not be surprised if it tried to take another run up to 4,000 before taking a bit of a deeper correction. On the NASDAQ as well, on the NASDAQ, here again, having produced a bullish candle, I beg your pardon, a bullish candle on Thursday, it kind of seems to have disregarded that, not necessarily broken much higher than that, and sort of looks quite bearish. Again, also looks as though it's potentially considering the idea of a correction, and possibly it's going to hold around the 13.5 mark. So my plan A so far is to anticipate that these will manage to hold, maybe at the previous highs or around the recent lows, before breaking lower. Some of those I want to give them the benefit of the doubt that they can hold and do it. Looking at the Russell 2000, which is just incredible, a thing of beauty. It's produced a nice bullish engulfing candle. That is relatively, that's a bullish signal, looking to me as though it's going to really wants to attempt to continue to go higher. There's certainly a level of resistance there at 2.3, so we'll have to see how that ultimately plays out. But also it started that swing high on the weekly. So again, but coming back down into these lows, it is showing here certainly looking like it wants to take another run at the highs. And if that is the case, the implication is that with the rest of the US markets, that they're likely to do a shallower retracement on the weekly rather than a bigger drop. So it just means that I'm going to exercise some caution, because I'm not entirely convinced yet that there's going to be a deeper correction just yet. And actually, before I continue, please, I want to ask you a kindness. If you don't mind, if you could please click the subscribe button. And like one of the videos that you do, and also please engage with me a bit more, give some comments into the areas below, the comments boxes below, and let me know if there's any kind of content or particular instruments that you would like me to take a look at. Thank you very much. So moving away from the US, heading east, having a look at the UK. So this one's quite interesting to me. There's a lot of history behind the 6.3 level, going back to 6.9, but over, let's just say, 30 years, it has struggled to really comfortably breach this level and stay above it. However, recently it has managed to come back, test it, test support, head away, test support, head away, and again producing not just a bullish weekly candle, but actually the monthly candle so far is looking very similar to the daily here. It's looking nice and bullish, and we have a nice bullish candle. Excuse me. So all of this pointing to certainly the market wanting to go a little bit higher. So what I'd like to see this week is to see it successfully ideally break above the high of Friday, 6.550, and head up towards 6.8. That would make me very happy if that's going to be the case. The DAX still struggling with its resistance band over here, that weekly just consolidating effectively. If it can break out, that's good. There'll be some potential moves to the upside then on the French CAC as well. So I'm not noticing any real bearish divergence on any of these indicators so far. Possibly I could argue that there's a little bit here on the DAX, and of course it is struggling at the same time, and potentially that's more likely to just be a consolidation on the weekly at this point in time. Then having a look at the French CAC, it has come back down to previous levels of resistance, produced a bullish candle, and that weekly not at all overextended. So yep, it's to me it still looks that a little bit more bullish than bearish. We've got the Euro stocks here coming back down, broken through a resistance band over here, coming back down, producing a nice little bullish candle, weekly not overextended. Therefore there's of course that possibility. To me it's still at kind of at worst, I think I'm still leaning more to the upside today than I am anything else for this week. So more 60-40 that it's more likely to do a move to the upside. There's just not enough divergence in the momentum indicator. Price action is also just not looking skittish enough, and the weeklies are not ridiculously overextended. Okay, so although there are some signs of a potential weekly correction, in every other respect it looks more bullish than bearish. And also even here, Nikkei again producing a little bit of a bullish, small bullish candle in the moving averages, not ridiculously overextended. if it did continue upwards from here, it would not, in my opinion, kind of be really breaking any kind of price action rules. It could actually do that. Now, just finishing off here with the ASICs in Australia. This one now looking like it really potentially wants to come back down to test 6.7, and that weekly also producing bearish price action along here. So this potentially here may want to hit a little bit lower back into this resistance band and test that for support. We'll see how it reacts around these levels, around the 6,750 level as well, for potentially finding support. So in summary, just to go back, my expectation initially, my plan is to see price ultimately manage to either hold the line for where it is, especially as the weeklies are showing some potential for a bit of a correction, but not necessarily a big one. There's just not enough heavy bearish divergence across the board at this point in time to show that to be the case, unless there's suddenly a big drop to these local areas. So the first thing I'll be doing is looking to see how price reacts on the previous highs across most of the indices, and especially the ones that are bearish. I beg your pardon again. Especially the ones that are bullish in their setups, to see if those setups are followed through on Monday and or Tuesday at the latest, pushing a little bit higher. Alternatively, if they're just completely disregarded, then I think that idea of a weekly correction coming back down, not very far back down into the previous highs on the weekly, potentially back down into the moving averages, very close by, because none of the charts are extremely overextended, and therefore a healthy weekly correction would really not be a very significant drop at this point in time. So that's my plan A. Plan A leans towards either a shadow drop or a bullish continuation to the upside, but more positive than negative. And then we'll see if none of those options come. If there is, for some reason, something negative, but not really anticipating any major economic shocks to the system this coming week. And that's really it from me. Have a great week, and chat to you next week. Thank you very much.